Today, ladies and gentlemen, I'm updating you on the $111,000 dividend portfolio, and the dividends have come down. I'm actually losing out on dividends. I was making just over $400 a month not even a week ago, and yet today I'm only making $385 a month. So I went from $400 a month to $385 a month, and I'm going to explain to you why I am scaling down in some of my positions and what I plan on doing with that money, because there is a lot more than just stocks for passive income. And if you are new to this channel, you need to slap that like button and consider subscribing, guys, because the stuff I'm going to talk to you about today, there aren't a lot of people talking about it, and the fact that I'm willing to show you inside of my portfolio and my accounts is very personal to me, and I trust me, there are a lot of guys that aren't willing to do this. So let's jump right into this. Welcome back, my passive income investors alike. Welcome to this incredible day of stress, insanity, and my life overall. Looking at the stock portfolio and explaining to you why my dividends are down and some of the decisions I make and what I plan on doing with my life here, guys. But let's take a quick peek at the TFSA to start. We're going to go over 3 accounts, look at the worst, the best positions, and then I'll also clue you in on some of the stuff that I'm going to be making videos on in the not-too-distant future, guys. But starting this video off, we're going to look at the Canadian position still. Holding BNS, that Bank of Nova Scotia, CM, which has been taking a kicking, one of my worst Canadian positions so far. And then on top of that, we have Northland Power holding flat, which is what I want because it's one of my best dividend pairs. But as we take a peek here, guys, we got equity and equity equivalents in the U.S. positions, with Apple taking the lead today so far, up a whopping, I think, $3 or $4 as it stands. It's up like a decent 3% or something like that, I do believe. We're looking at British American Tobacco, finally starting to see a little bit of green. This thing is going to explode. I promise you at some point. Might not be today, might not be tomorrow, might be a year, might be 2 years from now, might be 5 years from now, but I still am quite confident. I was just doing a wedding on the weekend, and more than half the people were outside smoking. We thought people left early, but they were really just making me money. But then we got GEO Group here, guys. This is the one I want to talk about the most today because I know some of you subscribers are actually holding this position, and I just want to analyze some stuff, maybe make you feel a little bit more comfortable. Especially if you overpaid for this stock like I did, but I took this stock at a 30% discount. I just wasn't thinking it was going to drop another 30%, but I went into this understanding that there could be 50% volatility spikes. You're buying this for dividends. You are not buying this for equity. I think when you buy these volatile, high dividend yielding stocks, you have to prep for this, but this is one that I am more than comfortable dealing with this kind of loss. Then we got Microsoft and SO, still doing really well. SO is finally starting to pull back just a wee bit, but still not enough for me to want to buy. And Microsoft's been on a tear, outperforming my Apple stock by a long shot. This is just my tax-free. So this is all tax-free income. I'll go over the dividends in a sec, and then I'm going to explain to you why the dividends are down. Here's my full position for BTI, though. I have more British American Tobacco over here, along with Tesla and MO. And MO is finally starting to come back a little bit, but I overpaid for it in Canadian dollars because the Canadian dollar, I think, was down when I was buying it, and now it's up. So I slightly overpaid, but it's still doing pretty well. Dividends are amazing. I think these companies are coming back. We got Tesla finally starting to come back nicely. We're sitting at 255. And like I said, I have no problem holding it here if it comes all the way back or whatever. I just can't be buying this right now. I'm still focused on some other important things. Now, you're going to notice I have $5,638 in this account. What I did was I sold BMO. The Bank of Montreal that I was holding, guys, was my only bank stock that was in the green, and I want to start mitigating away from banks. As I've said, I'm way over spread in banks. Like, it makes up too big of a position in my portfolio. And what I'm trying to do right now, actually, you know what? Before I break this down, let me just check out the last account, the RRSP. This is my buy a house fund because in about a year, I'm planning on buying a condo or a house to rent out. It's going to be a load of BS and a lot of work, but it's just something that I think you should have it as an asset class, even if it doesn't make you much more than 5 or 6%. Because let's be real, usually stocks and real estate are really slow builds, and especially with where equity sits today in homes, I don't think you're going to get a lot of equity value. But because I'm just trying to get out of the rat race right now, I'm more focused on just getting that cash flow set up, and then later on I can start focusing on higher yielding companies on the equity side, like Johnson & Johnson. I think is really cheap right now. There's just a few companies that I think are relatively cheap. So the money sitting in here, I put in tax free. It's money I don't have to pay tax on, and then I do plan on selling out of this when I go to buy a house, but just to keep it safe, protected, I'm putting it in an index fund that I really like that's done very well. It's basically an S&P 500 index based off Canadian dollar, so it is the S&P 500, exactly the same as VOO. It's just paid out in Canadian dollars, which makes it a lot better for me, being a Canadian. So let's go back to this account before we hit up the dividends, and I'm going to explain to you what I'm going to do with this $5,000. So What I plan on doing with this is I'm going to transfer it into my basic savings account. I have to come up with about $9,000 because I'm going to be buying an online business, and I need to come up with a minimum down payment before I can even see the businesses. And this is a process that I'm going to try and do before the end of the year, because if I can do this, the amount of money I'm going to save on taxes is going to be crazy. In fact, I might even get money back because I should be in the red on spending on expenses, because I'm going to use debt to pay for this business, or partially debt. I'm going to do 50% finance and 50% with my own money. But before I can start looking at them, I got to get 9K in the account. So there's $5,638 to add. I've got about, I think, 2 or 3,000 that'll just be sitting around in my basic savings account with my emergency funds. So I mean, this should really help out get me that 9-10K mark, so I can start looking at online businesses to buy. And the reason I'm doing that, guys, is because there's no money in, don't get me wrong, if you're self-managing an account in stocks, 10% is pretty good. 8 to 10% is the average rate of return on the stock market, but you don't want to be in the stock market doing this aspect of it. I notice a lot of people like PPCE and are really focused on building up positions in stocks, but they have to pay tax on those incomes. And unfortunately, the position I'm in, I do not want to pay tax on any of these companies. And these companies do not sit in a tax-free savings account. And any money I add here, I'm paying tax on. Any money I make off here, I'm paying tax on. It's just a tax bracket craziness. So what I want to do is I want to get all of these positions, slowly mitigate them into my tax-free savings account over here by selling Apple and scaling down in anything that's running up really high, which I've started to do with Northland Power. I scaled down and bought British American Tobacco in here. And I want to mitigate those stocks into those accounts. And then what I'm going to do is I'm going to buy an online business. I'm probably going to take all of this money here, which will be about, again, 20,000, right, guys? So we got 20,000 here. I'm going to get rid of all of this, and all of this is going to go into an online business that's hopefully going to be cash flowing me about $1,000 a month, which is more enough than to pay the debts and continue to fund myself. Because, like I said, the problem with PPC and a lot of these other YouTubers I watch is they really focus on the stock market way too heavy, in my opinion. I don't know what his life is like. I can't make an opinion on somebody else's life. Whatever works for you, and that's all that matters. But for me, because I'm still stuck in this rat race and I can't handle the stress load that I'm under right now, I have to make some decisions that I can't screw up, and they're going to be very costly, and it's going to have to do with buying an online business and a piece of real estate. So in this time being, I just need to really keep my head down and try not to screw up too much with what's going on in here. So slowly, by the end of the year, I might end up purchasing an online business. So all of this will just go into that, and then hopefully I'll be able to get most of these into my tax-free savings account. They won't be as big as positions as these, but really they don't need to be. And that way I won't pay any tax. I'm going to be cash flowing an extra $1,000 a month on top of what I'm already making. I'm going to have a really good tax deferral this year, and I'm going to still be able to show a lot of income. My incomes are going to go up, so I'm going to be able to save up money faster to come up with the down payment for a house or a condo, which the government's going to pay for pretty much anyways. This all sounds really confusing and insane, and I know. But trust me, what I'm doing is something that I think is going to change my life forever, and I'm going to be looking at financial independence within the next 2 years. I will be making enough cash flow. I'm confident that whether I'm in China or wherever, I will still be getting paid at least a healthy income between $2,000 and $3,000 a month, and then with my working income, that'll add an extra $2,000 a month to that. That is what I'm building toward. So we can take a look at the dividends, guys, and this is why the dividends have dropped. Right now, I'm not making a whole lot off VFV, but I don't care about that. But the reason I'm not making a whole lot is because I just sold BMO. My dividends are going down, but that is expected, to be honest, because I can't keep these positions. I have to find something to do with this, or I am going to be paying a fucking massive tax bill at the end of the year. We're talking about 10 or 15,000, which I'm not trying to complain about. I just know I don't have to pay that. So why pay it when you can defer it into something that's going to make you more money over the long term? So we can see in here, guys, this is the important account. This is the one that I love. This is the one I got to focus on and the one that I got to build up, because this is the account that is paying me all tax-free money. I am bringing in $1,208 US tax-free, and I'm bringing in $1,968 tax-free. Mind you, you do have to pay foreign income tax on this, but it's only like 15%. So that's why I'm diversifying between 50% US and 50% Canadian. I just need more Canadian positions, but I will build into that over time. And this month, guys, we're finally getting into the 29th, so I'm going to be having some massive dividend payments coming in. We're talking quarterly payments from these two companies, which equals to what? We got 246A, we got almost 200 coming from this one, and then we got what makes up the 600, about 150. So between two, that's 350 just coming in CAD, and then what else do we got coming in here? It looks like we got some more coming in off GEO Group. Group, which is wonderful, which is what we're going to talk about right now. Actually, let's talk about GEO Group. So this one's paying me an 8.3% yield. I'm going to get a quarterly payment coming up soon. I'm looking forward to that. Maybe I'll use some of that income to maybe even buy some more GEO Group, or I might use it as well to start funding an account to maybe purchase an online business. But anyways, moving on, guys, let's talk about this GEO Group because there is some serious headwinds here, and I want to read some of the things going on that have caused this stock to plummet because I know some of you own it. And I want to make you a little more comfortable maybe if you do own it. If you don't know what this company is, it's a prison stock. It's under extreme stress right now because politicians are claiming they want to abolish private prisons, which we're going to read about right now. So if we take a look, first of all, over the last year, guys, I was buying this stock around 23 bucks, right around here in this range. And then if we take a look at the 5-year chart, I was paying a massive discount because from those highs already, I was getting it at a 30% discount. But now from the highs that I've been buying it at, it is down almost another 30%, right? So I want to show you why. And I want to, again, try and make it a little more comfortable. So banning private prisons and prisoner exploitation. This is a reality. I'll read it to you real quick. Last Friday, Senator Warren vowed as a president to terminate all federal prison contracts and to pressure local and state governments to do the same. The government has a basic responsibility to keep people in its care safe, not to use their punishment as an opportunity to profit, she wrote. Warren plans to promise to regulate private prisons, companies' services in prisons, and eliminate service fees for prisoners using basic services like phone calls, bank transfers, and healthcare. So let's say something really quick here, okay, guys? First of all, these are people that are a burden to society. We want to correct them. We want them to come back into society as functionable people. But the problem is a lot of these people are going to be locked up for life. They're serial killers. They're rapists, child molesters, horrible, horrible people, okay? First of all. Now, what this company is doing is they're using private stock options like that I'm buying to give people like me the opportunity to help build the infrastructure for prisons. And in return, they're going to pay me a really healthy dividend yield. And the way we get paid with that dividend yield is by charging these horrible, horrible people to use commissaries, to use phones, to have access to healthcare. They need to pay for it, or they don't get access to it because they are horrible people that are sucking the system dry. And here is this Elizabeth Warren thinking that she's going to be able to pull out the real estate from under me and unprivatize these prisons. But what she is requesting is so absurdly complicated. I don't understand why people are getting all worked up about this. First of all, people that own these companies aren't going to be voting for. It's just a stupid thing to go on. Honestly, I'm not too worried about this, guys. I think the infrastructure is so large and so set in place. It has been since the 90s. This company has had a track record of being a private prison for a very long time, a very, very long time with a fucking insane rate of return, like a serious rate of return. And now it's paying out a 12% dividend yield. It can definitely afford. I was buying this because Trump gave this company a $100 million pay bump this year. And yet somehow the stock has plummeted ridiculously from its all-time highs, almost down 50%. But again, this is a company you are buying, understanding there is going to be absurd volatility. This company does 50% price movements like it's a daily occurrence. It just happens again and again and again, and it is because of these political problems. There will always be political problems with prisons because we, the taxpayer, are paying for it. It will always be a thing in the political race. And back when Obama was president, this is what happened. And now the same thing is happening again, where now that Trump's running back for presidency, all these people running up are attacking the prison system. But again, I don't think they realize how hard it is to adjust. So to be honest, I'm not worried. I'm really not worried about this. I think this is a great buying opportunity. That is my own personal opinion because I can handle the risk reward and I am not over leveraging into this. And as you can see, my accounts haven't really changed. I haven't really lost money. I haven't really made money this year on my my basic my accounts, but I'm still getting paid tax-free every month, baby. And that's what matters. So be prepared, guys. Coming out at the end of this month, we got Apple earnings, and this is going to dictate a lot of what happens in the basic indices. So pay attention to this coming up July 30th, guys. We're getting there soon at the end of the month. So keep your eyes open, keep your ears open, stay cool, stay awesome, and I look forward to chatting to you real soon.